Hello, everyone, and welcome to this episode of Coffee with Carl. I am your host, Carl Zellner, one of the attorneys with Anderson Business Advisors. And today I want to do a special episode, sort of a, a crossover episode, I guess. Do a little and talk a little bit about infinity investing. I've talked to several clients who are interested in infinity investing, and some of the initial concerns are always, I don't know the stock market. I don't feel comfortable doing it. Is it difficult? So today I want to spend a little bit of time talking about one of my most recent infinity investing purchases. I've been doing this now for a few years and really like it. It is not, as those of you who are familiar with Toby, it is not a get rich quick scheme. It is a build wealth over time deal. I tend to trade in my Roth account so I don't have to pay tax on the income, which is always a bonus. So I'm going to take you through an infinity trade that I've actually been working through here over the last few weeks, just because some of the timing stuff worked out. So I'm going to share my screen here and we can take a look at what we're looking at is my E-Trade account. There's no preference there. Also, I should do the I guess the the thing when people do trading online. This is not investment advice. This is simply the way I'm doing it and showing a way we do infinity investing because I like it and it's worked out well for me. So I'm looking at AT&T here. Some of the attractive things I'm looking at are the dividends, pretty nice for the cost. So it's $26 stock this morning. I guess the date's probably up here. The way I went into this, I mentioned I've been trading this now for a few weeks. So first time I went in and bought. Actually, I put a put, or I bought by a put, which means I'm basically saying I commit to buy at X dollar. Then I went in, and once the stock was put to me, I wrote a call on it. So I rented out and said, basically, I will commit to sell at X dollars. Made a little bit on that, not a ton. I think it was like a couple $100. Then this time period came around where I didn't no longer had the stock because I got called out of the stock. So I said, oh, I want to capture the dividend because the dividend's pretty nice here. Looks like right now it's 7.82% or 52 cents a share. So I didn't actually put into the stock this time. What I did this time is I just purchased the shares and I was made sure I was holding them on January 7th so that I would get the dividend payment for all of those stocks. So what I did was I bought the stock, I didn't put into the stock, and then I held the shares through 1/7. I wrote an option for a call that extended out past 1/7, a couple weeks out, which is a little bit longer than I usually do, but a couple of weeks worked out fine for me there. So I collected a premium on renting that stock out. Then that couple weeks later, the stock got bought, and I marked it as $1.50 premium per share when I wrote the call. So I made a couple $100 on the calls, and then somebody bought it out. So I made, let's see, another, I think it was just over $1,000 when I got caught when the stock got called away from me. So where we're catching it in time here is basically I am rebuying to get back into AT&T because I like it and it seems to be heading the right direction. I'm not going to go into the chart tech or the charting technicals here. It's a relatively stable stock that has seen some push up in pricing. Usually, when it's sort of one of considered a safer stock. So when we see these sort of hiccups or issues happening with the stock market, people tend to run towards the bigger stocks or the bigger names, and AT&T is one of those names. So my interpretation of the market is I think AT&T will continue to go up while we're seeing some of the rockiness in the market as we sit here. So like I said, I trade through my Roth, but I wanted to show you guys and gals what it looks like to do an option contract. So E-Trade's nice. They have a little side. I don't know. I used to call it like a widget here where I could do it. So I don't currently own the stock. So what I'll probably do is purchase on a put for a price where I can collect a little bit of a premium. And then once it gets assigned to me, or if it doesn't, then I'll still make some money on it. So let me do a put here. I'm just going to go to the option chains tab because it's a little bit easier. You can see here, this stock offers weekly options. So these basically are good until Friday. The current price is $26.38. Let's see what we're looking at. Dow Jones is down today already, early. So I think it's going to go up. So what would I be willing to buy this stock at if I think it's going to go up? So, and we can talk to usually the blue stuff is what's called in the money. So if I proposed to buy it at $26.50 a share, then that's more than the 26.38 it is a share right now. So that's why it's highlighted in blue. Same thing as if I already owned the stock and was planning to sell it. $26 is less than what it's worth. So that's why it's in the money on this side. So the way I think about it, or the way I do it, is I think, okay, so if I'm buying into a stock, I'm on the right side of the column here. If I own the stock and I want to rent it out, that's on the left side of the column here. I don't know that a lot of people, I'm sure there's some people that do it. I haven't heard it taught, but another good little cheat that I guess I use sometimes is to see where the open interest lies, tends to be where the sort of market makers are going. So it looks like on the sell side, there's more interest at this higher, but this could be carrying forward from weeks forward or weeks past, because last week I think it was up in the 27.50 range. To me, I feel good about buying the stock at $26. I think the 37-ish cents a share is pretty good. Let's see, I'm in my Roth account. I want to do 10 contracts. Let's see. So there's a spread here, between 33 and 36. You could do a limit order. So 34. That's 4 cents. So if I go, I don't know, 34 cents. Okay. So right now my limit price is 37, which is pretty good. And I am willing to do a put at that amount. That's interesting. So even in the time we were just talking about it, the price changed enough that it pulled me further away from there. Let's see what happens at $26.50 if we change the price we're looking at. And then 53. To me, 53. And let's do limit. We can look at a 54 cent per share price. That seems okay to me. So ultimately what I'm doing is there's a spread between 53 and 56. So if I look 53, 54, 55, 56, it's 3 cents. I'm going just less than half because my likelihood of being picked up at that price is pretty reasonable, especially like I said, the Dow Jones is down. So I feel like the price is going to be going up fairly quickly on AT&T. So there we go. Like I said, I like E-Trade because it's very simple. You're not required to use whatever you want as far as a broker is concerned. There's commissions on this. So that's $5 is going to the house. Proceeds on this purchase would be $534. And if this $26.50 is greater than the stock price is at the end of the week, then I'll own the stock at $26.50. And then I can start renting it out on this left side of the equation. If it's more than $26.50, then I still get to keep that $534, but I don't own any stock. So it's, like I say, it's pretty neat there that you can chip away at some of your monthly income by putting into the stock. And then if you own it, then I can call or write calls against the stock I own at $26.50. So pretty much it. Let's preview the order here. Okay. It's fine with me. Good. Now my order's been placed. So interestingly enough, usually the way that I will see this is it pops up on my phone as well. But if I go to the basically home on this page, I'll see that I purchased it right here. So the market accepted my put. So that means I made that $500 and something right now. And we'll see at the end of the week if it's over $26.50 or not. And if I own the stock, I can start renting it out and writing calls against it. So hopefully that was at least a little bit educational. You can see it's pretty simple. I'm not doing anything complicated here. And that was a quick $500 on a Monday morning. And so, good way to start the week. And like I said, it doesn't take very long. So as always, I would encourage you, if you guys like the video or gals like the video, please continue to subscribe and like. And also, if you have friends that would like this type of thing, feel free to share the content with them too. As I mentioned, this is an investment advice. I'm not telling you how or what to buy. I'm just showing you or sort of illustrating some of the items we're teaching in Infinity Investing. So there's much more complicated schemes. There's much more simple routes. Some people, as far as the option side go, really like just saying, you know what, let's look a couple of years out and see what we can do. And that way I can really sort of set it and forget it and go that route. As a matter of fact, let's take a look at that just so we can go through that too. So let's go back to AT&T because that's the one we're already using, right? Oh, by the way, one thing to mention on your sort of home screen of that is if you're doing Infinity Investing, basically your home screen isn't going to be super useful. So you'll see some lower numbers, things like that. I'm not concerned about my daily account value. I'm concerned about the premiums I'm taking, as well as the ability to rent that stock. So realistically, I don't really care about this number. By the way, this is only one of my small accounts here. I've got a couple other accounts in other places too. But yeah, the minus 159 this morning means almost nothing to me because it's not where I'm generating my income from the market. I'm generating it off those calls, those puts, and the premiums I'm going to charge when I write that call. And also the dividend, right? Because I'm making 7%. When I owned it on 1/7 or January 7th, I had 800 shares. So I locked in that dividend. Doesn't get paid out till February 1st, though. So that's basically there too. So I just mentioned about going far out. If you go far out, so this is, like I said, January 28th of 2022. So that's the one we did the put on. So that's this week. But we can go, let's go look at here, January of 2024. Let's see what those premiums look like. So if we went out to January of 2024 and I did the same thing, well, except they don't have 2550 on here because it's so far out. So I'd be looking at either doing $25 or $27 premium to put, but the spread's larger. So if I'm 380, 425, I could probably do $4 a share on this 25 number and it would get accepted. So if I did $4 a share on that 25 number, that would be roughly $4,000, I believe. Yeah, $4,000 for a premium over, and then just let it sit for 2 years. You can get the benefit of collecting the dividend all throughout that time. The other thing is if for some reason that option becomes less valuable or valueless, you can always buy it back during that period of time too. Some people like it because it is definitely way more set it and forget it. I tend to like to do shorter periods of time currently, not all the time. I've set them out a year or more before, but I like to do the shorter periods of time because in that same period of time, if I'm doing it weekly for about the same amount, we did $500 today, so you can sort of do the math. The time value of money there, you can, depending on what sort of cycle you're in or what you prefer for your investing strategy, can make a difference. So like I said, if you go out, you can go, a couple years out and collect a huge sort of a larger premium up front. You'll always have the option to buy it back. So there's lots of flexibility there. However, what I would say is ultimately, if you're looking to maximize that income that's coming into your account, I would look shorter periods of time tend to work out better just because ultimately you can do it more over the next 2 years than if I just did one thing one time over the next 4 years. That's why you tend to get that larger spread as well, because 2 years out is pretty speculative. So they're built, the market makers are not dumb. They build in risk into those things. So it's a good thing to note there. Anyways, hopefully everybody enjoyed this special episode of Coffee with Carl. Like I said, please like and subscribe if you haven't already and share with your friends. Hopefully this is entertaining. And if my put gets bought up by the end or gets put to me at the end of the week, I will do another video where I'll show that, and then how I'll start writing calls, and we can start working on that side. So hope everybody enjoyed this one. A little bit longer than usual, but I thought it'd be fun to sort of share the screen because I know a lot of you have interest in infinity investing, and I've been doing it now for a few years and have had some good success with it. So I just wanted to show how easy it was. I picked a stable, good stock with a good dividend. Knew I wanted to buy it, but I actually wanted to make a little in buying it. So that's why I do the puts. Then, like I said, if it gets put to me, great. Then I have a stock at a price I think is going to be good for a while, and I can write calls against it. And also, if for some reason it doesn't get put to me, I still get to keep the $500 and pretty good start to your week. So until next time, thank you all for joining me for this episode of Coffee with Carl, and we will catch you on the next episode. Thanks, everybody.